After 2 days of talks in London, the U.S. and China say they have agreed on how to implement their tariff truce reached in Geneva last month. The American president declared in a Truth Social post that the trade deal was done. Joining us now to talk about this is Tong, managing partner at the Asia Group and a former U.S. diplomat. Kurt, thanks for joining us today.
My pleasure.
What would you say was the most urgent issue for China, and then what would have been the most urgent for the U.S.?
Well, I think the U.S. side was particularly focused on getting China to relax its export controls on rare earths and magnets. Those restrictions were starting to have a significant impact on supply chains affecting a number of industrial goods in the United States as well as in other countries. And so the urgency that the president showed in getting on the phone with Xi Jinping last week and then convening this session in London was really kind of an emergency session to get China to unwind those. However, the United States paid a significant price in order to do so by relaxing many of the measures that it had taken on China as export control matters in the intervening weeks since the Geneva Agreement.
Okay, so let's unpack that a little bit more. China pretty much controls the rare earth minerals market. Did that give Beijing sort of the biggest bargaining chip here?
It did. And the pattern that we've seen, so just to take it all the way back to the beginning of the Trump administration, the U.S. put extraordinarily high tariffs on China. China responded with its own tariffs of equal magnitude, and then a truce happened, bringing both sides down. And then subsequent to that, deeper talks were supposed to start, but the U.S. instituted additional technology control measures on China. China, in turn, did not fully implement what the United States thought it had promised on the rare earth side. We had another meeting, those brought down. So the net result of this is kind of starting back at square one with not much significant new progress made in improving the U.S.-China economic relationship, but with higher tariffs than when we started at the beginning.
Okay, so you mentioned the higher tariffs. China now faces a 55% markup on goods. Why do you think Beijing agreed to that?
Well, that was already there. So the United States is announcing a fact which already existed as an accomplishment. China has, in essence, accepted this reality that the rough total net tariff on Chinese goods is about 55%. In the other direction, it's approaching 25% for U.S. goods sold into China. So it's high tariffs on both sides, which is going to lead to lower trade volumes to the detriment of trade. The question is whether either side is really accomplishing in shaping or changing the fundamental perspectives about the relationship using that leverage. And so far, there hasn't really been any breakthroughs.
So the U.S., and you mentioned this as well, excuse me, is allowing some technology goods to flow to China that did not before. Does that open up sort of a Pandora's box here?
Well, it's a loss of leverage, and the question is the United States going to treat its own strategic export controls on China as a bargaining chip or as a national security measure that's not negotiable? The previous administration treated them as not negotiable, but the previous administration also did not engage in any meaningful trade negotiations with China to try and either open the Chinese market or get China to change its export policies towards the United States. So this administration is being more ambitious, putting more on the table. The question is whether that's going to work or not. So far, it has not.
We also know that Chinese EVs were facing a tariff that pretty much doubled the price into North America, Canada, and the U.S. Did they note any progress on that? They mentioned tariffs are moving or staying at 55%, but they were actually double for EVs. And I can't imagine the Americans agreeing to open up their market to Chinese electric vehicles.
I do not think there's been any advancement on China's agenda on that front.
Okay.
Fundamentally, the U.S. market for both EVs and actually Chinese vehicles in general is pretty much completely closed.
So how do you see this? Is this progress made? You mentioned it's kind of progress made on what was already announced some time ago.
I don't think much progress has been made. I do think that a channel for conversation has been established, which is good. The next step would be for the United States to clarify what it really wants from China in terms of either market opening measures by the Chinese side or assistance in the U.S. economy in terms of what China does or does not sell to the United States, or how it does or does not invest in the United States. That clarity is missing. I do think that clarity will start to emerge, and the U.S. will have some clear negotiating objectives, and then we might start to see some progress. This will go on for months now. I'm sure the presidents will meet in person this autumn sometime, perhaps with a visit to China by President Trump, and there will be some progress over time. But it's been a slow start, mainly by focusing too much on the leverage and not enough on the desired objectives.
As you know, businesses have been not spending. They've been stalled because they want to see some of the tariff uncertainties work through. If you were running a business, would something like today's framework agreement give you that confidence?
I think it will give some reassurance to traders that there's some increasing stability in the U.S. China conversation. You know, they had talks. They agreed on some measures, relatively modest but significant, in making sure that supply chain shocks were mitigated. And so I would take some mild encouragement from the progress in communication. The fact remains that there are high tariffs on both sides and fundamental distrust between the governments, but there has been some forward movement.